surrounding the BRICS nations has somewhat died down, I expect to see a reemergence of this discussion in 2025. Trump saying he'll enact 100% tariffs on the BRICS nations for continuing their desire to move away from the dollar. That's not a tariff. Tariff protects manufacturing, domestic manufacturing. That is a sanction masquerading as a tariff. That is financial warfare. That is not something that I think will dissuade the BRICS from continuing to move forward. I think that from a domestic standpoint, I think the debt issue is something that has to be front and center. I mean, even Trump just sent out a tweet the other night saying, thanks to what the Democrats have done, 2025 could be a 1929 style depression. You look at the latest Treasury data that was just released for November, which was the second month of fiscal 2025. The U.S. spent $584 billion for October and November. That's the first 2 months of 2025 for the fiscal calendar year that Trump is inheriting are officially the worst start to a year ever for the Treasury. When I look at gold acquisitions, again, China doesn't buy gold for no reason. And they've bought 1,000 tons since the start. That's what they tell us, since the start of the Ukrainian war. At the time, they've sold $250 billion of our U.S. Treasuries. This is a trend that will continue. This de-dollarization will continue. I think they'll continue to accumulate gold rather than try to devalue their yuan against the dollar. They'll let it happen organically by accumulating gold. I think that's something certainly to focus on. Of course, it's the bond market. At the same time, I think the bond market, or with the Fed creating trillions to fund these deficits, that not only that they're inheriting, but the debt that is coming due. I think the bond market's getting very nervous that they see inflation coming back, that the ballooning U.S. debt is something that has to be dealt with, and how many Treasury securities will have to be created to do so. At the same time, many of the countries that traditionally supported our debt are moving in the other direction. So I think that's something that we'll have to continue to watch very, very closely. But yeah, I mean, if I had to guess, I would say also we're not out of the woods yet regarding the banks. And I'll keep coming back to what happened in Lindsay, Oklahoma as a trial balloon. They didn't say a word about it on the media. It was literally just kind of stuffed under the rug, and yet it's the first bail-in in this country with over $1 trillion in commercial real estate loans coming due in 2025. With interest rates moving higher on the back end. And it's not the federal funds rate that matters. The economy runs on the 10-year Treasury. I mean, the mortgages and the credit cards and the leases and all of these things, they're all about the long end of the bond market, which is moving in the other direction. What havoc is that going to wreak on the banking industry? What havoc is that going to wreak in the commercial real estate? And I keep coming back to this thought of restructuring. I mean, Trump is the bankruptcy king. I mean, is this something that's baked into the cake? Do they know that we're going to have to reset some way? And is he here for that reason?
Gold has been a cornerstone of financial stability and wealth preservation for thousands of years, transcending its physical properties to become a symbol of enduring value. Throughout history, gold has maintained its allure as a safe haven, a hedge against economic uncertainty, and a store of wealth that transcends national borders and financial systems. In a world increasingly fraught with financial instability and geopolitical tensions, gold's importance is being reaffirmed on a global scale. The timeless appeal of gold lies in its intrinsic characteristics. Unlike fiat currencies, which are subject to inflationary pressures and government mismanagement, gold represents a finite and tangible asset that has consistently held its value over centuries. Its scarcity, durability, and universal acceptance have made it a reliable medium of exchange and a trusted store of wealth. From ancient civilizations to modern economies, gold has been the bedrock upon which financial systems are built. In ancient times, gold was the currency of empires, facilitating trade and economic growth. Even when paper money emerged, it was often backed by gold reserves, ensuring its value was tied to a tangible asset. The gold standard, which dominated global financial systems for much of the 19th and early 20th centuries, is a testament to the metal's pivotal role in maintaining monetary stability. Although the gold standard was eventually abandoned, gold's significance as a reserve asset remains unchallenged. In today's volatile economic landscape, gold has reasserted itself as the ultimate safe haven asset. When financial markets are in turmoil or when geopolitical tensions rise, investors flock to gold as a means of protecting their wealth. Its lack of counterparty risk makes it unique among financial instruments. Unlike stocks, bonds, or currencies, gold's value is not contingent on the solvency of a government or corporation. It stands alone as a tangible asset that can weather economic storms. The resurgence of gold's importance is evident in the actions of central banks, sovereign wealth funds, and institutional investors. Central banks, particularly in emerging markets, have been aggressively increasing their gold reserves in recent years. This trend reflects a growing recognition of gold's role in diversifying reserves and reducing reliance on the US dollar. Nations such as China, Russia, and India have led this movement, signaling a shift in the global financial order. As we enter 2025, the gold market is thriving, driven by a confluence of economic and geopolitical factors. Persistent inflation, mounting debt levels, and the erosion of trust in fiat currencies have created a perfect storm for gold. The metal's price trajectory reflects these realities, with gold consistently outperforming other asset classes in times of uncertainty. Inflation is a particularly powerful driver of gold prices. When the purchasing power of paper money erodes, gold acts as a hedge, preserving wealth and ensuring financial security. In the current environment, where central banks are grappling with the dual challenges of controlling inflation and supporting economic growth, gold's appeal is undeniable. Its ability to maintain value in the face of monetary policy missteps makes it an indispensable asset for investors. Central bank gold purchases have reached record levels in recent years, underscoring the growing importance of gold in the global financial system. According to the World Gold Council, central banks added over 1,000 metric tons of gold to their reserves in 2023 alone. This marked the highest annual total in over half a century. The trend has continued into 2024 and shows no signs of abating. In an era of unprecedented economic uncertainty, gold and silver stand as beacons of stability and resilience. Their enduring value, intrinsic qualities, and universal appeal make them indispensable assets for anyone seeking to protect their wealth and navigate the complexities of the modern financial landscape. As we move forward into 2025, the importance of these metals is only set to grow, offering a lifeline to those who recognize their true worth. By understanding the dynamics driving the gold and silver markets, investors can position themselves to not only weather the storms ahead, but also capitalize on the opportunities that arise. Whether through physical ownership, mining stocks, or other investment vehicles, the time to act is now. Gold and silver are not just commodities. They are the foundation of a secure financial future.
You know, I've done interviews with people like Simon Hunt, who will tell you that he was selected, not elected, and he was selected to usher in this digital surveillance state. He talked months ago with me about they're going to issue a digital ID under the guise of election integrity. What do you know? He just said that. A lot of the things that I guess I'll just simply say this, and someone said it to me very apropos. He said, you know, is Trump the Trojan horse or is he riding on the Trojan horse? And that, I don't know. And I guess I would just simply say this after what we've been through for the last 4 years. If you don't look at everything cross-eyed, if you don't think outside the box, everything that's presented to us, I think you've missed everything that we lived through for the last 4 years. So as happy as I am that he's here, you have to wonder, what does it ultimately mean? I mean, what better guy to have oversee a bankruptcy or a restructuring or a reset than someone who's known for doing that professionally, maybe better than anyone. So I think there are a lot of things to keep your eye on. Most of them center around debt, and the BRICS have not lost sight of that. So don't underestimate the BRICS. Don't lose sight of the debt. Be optimistic, but understand that they're just like in the Shawshank Redemption, as I said with you before, Dunnigan, you have 2 miles worth of crap to crawl through to get to the other end. And maybe there is reason to be optimistic, but there is no way of getting to that other side without dealing with the mountains of debt and that tunnel full of crap that we have to crawl through. So I think 2025 is going to be a volatile year. And when the president-elect says, this next year could be 1929 style depression, thanks to what we've seen already by the Democrats, I think people need to, and then see 6 to 1 insider selling versus buying. I think we need to be cautiously optimistic into the into the new year.
As we navigate the labyrinth of financial instability, geopolitical uncertainty, and shifting power dynamics, there are clear indicators of where astute investors should focus their attention. The evolving narratives surrounding gold and silver, coupled with the critical issues of debt and currency devaluation, set the stage for what could be one of the most pivotal financial epochs of our lifetime. Gold has always held a unique position in the financial world, transcending its role as a commodity to become a universal measure of wealth and stability. As central banks worldwide scramble to accumulate gold, one thing is clear: its role as a financial cornerstone is far from obsolete. Historically, gold has been the ultimate hedge against currency devaluation, inflation, and economic turmoil. Today, these factors are more relevant than ever. Gold's resilience lies in its intrinsic value, a concept that fiat currencies fundamentally lack. Unlike paper money, gold cannot be printed or artificially created. It represents a finite resource whose scarcity inherently preserves its value. The continued accumulation of gold by central banks and sovereign nations, particularly in the BRICS bloc, signifies an undeniable recognition of this asset's enduring significance. When you consider the moves by China, Russia, and others to de-dollarize and shift toward gold-backed settlements, it becomes clear that gold's relevance is only increasing. The argument for gold as a store of wealth is further bolstered by its historical performance during crises. Whether it was the stagflationary environment of the 1970s or the global financial crisis of 2008, gold has consistently outperformed most other asset classes during periods of economic upheaval. With 2025 shaping up to be another year fraught with uncertainty, it is no wonder that investors are turning to gold as a refuge. While gold often steals the spotlight, silver plays a complementary yet equally critical role. Historically referred to as gold's little brother, silver offers a unique blend of monetary and industrial utility. Its dual role positions it as an asset with immense growth potential, especially in a world transitioning toward renewable energy and advanced technology. The demand for silver is being driven by two primary factors: industrial applications and monetary investment. On the industrial side, silver is indispensable in the production of solar panels, electric vehicles, and advanced electronics. With global commitments to reducing carbon emissions and transitioning to renewable energy sources, the demand for silver is expected to skyrocket. In fact, silver's role in the green energy revolution has led to a significant tightening of supply, further amplifying its investment appeal. On the monetary front, silver is often seen as a more accessible alternative to gold. Its lower price point allows a broader range of investors to participate in the market, making it an attractive option for those seeking to protect their wealth. Moreover, the current gold-to-silver ratio remains historically high, suggesting that silver is significantly undervalued relative to gold. As market dynamics adjust, this ratio is expected to narrow, providing silver with considerable upside potential. One of the most compelling indicators of gold and silver's rising prominence is the behavior of central banks and sovereign wealth funds. Over the past several years, central banks have been buying gold at a record pace, with 2023 and 2024 witnessing unprecedented levels of accumulation. The motives behind these purchases are multifaceted but ultimately boil down to a desire for financial security and a hedge against the declining credibility of fiat currencies. The reclassification of gold as a Tier 1 asset by the Bank for International Settlements, BIS, has further elevated its status in the global financial system. This designation places gold on par with U.S. treasuries and other high-quality assets, underscoring its role as a cornerstone of monetary stability. For central banks, holding gold is not just a defensive measure. It is a strategic move to position themselves for a potential shift in the global financial order. Sovereign wealth funds are also getting in on the action, diversifying their portfolios with significant allocations to gold and silver. These funds, often managed by resource-rich nations, recognize the long-term value of these metals in preserving wealth and mitigating risk. Their investment strategies reflect a broader trend among institutional investors to seek refuge in tangible assets amid growing economic and geopolitical uncertainty. Debt has become the elephant in the room for most major economies. The U.S. alone is grappling with nearly $36 trillion in national debt, a figure that grows exponentially with each passing year. The implications of this debt burden are profound. particularly as interest rates rise and the cost of servicing this debt becomes unsustainable. For decades, the U.S. and other Western nations have relied on low interest rates to finance their spending habits. However, as inflationary pressures mount and central banks are forced to raise rates, the ability to sustain these levels of debt is being called into question. The bond market, long considered a safe haven, is showing signs of stress. Rising yields indicate a loss of confidence among investors, who are demanding higher returns to compensate for the growing risks associated with holding government debt. In this environment, gold and silver offer a stark contrast. Unlike debt instruments, which are subject to default risk, these metals represent tangible assets that cannot be devalued or manipulated by central banks. As confidence in fiat currencies and government bonds continues to erode, the case for owning gold and silver becomes increasingly compelling. The geopolitical landscape is undergoing a significant transformation, driven in large part by the actions of the BRICS nations. By challenging the dominance of the US dollar and advocating for alternative systems of trade and finance, the BRICS bloc is reshaping the global economic order. Gold and silver are central to their strategy. China, in particular, has been at the forefront of this movement. The country has been accumulating gold at an unprecedented rate while simultaneously reducing its holdings of US treasuries. This deliberate shift reflects a broader strategy to insulate itself from dollar-denominated risks and to establish a more stable and independent financial system. Russia and India have also been significant players, with both nations increasing their gold reserves and exploring gold-backed trade settlement mechanisms. The establishment of BRICS-led financial institutions, such as the new development bank and the proposed BRICS currency, further underscores the bloc's commitment to reducing its reliance on the dollar. By incorporating gold into their financial frameworks, these nations are not only hedging against currency risks, but also challenging the very foundation of the existing monetary system. While central banks and institutional investors are making strategic moves, public awareness about the importance of gold and silver remains relatively low. This presents a unique opportunity for individual investors to get ahead of the curve. Understanding the dynamics of currency devaluation, inflation, and the broader financial system is crucial for making informed investment decisions. Education is key. As more people recognize the limitations of fiat currencies and the risks associated with traditional investments, the demand for gold and silver is likely to grow. This shift in public sentiment could serve as a catalyst for even greater price appreciation as limited supplies struggle to meet rising demand. As we look to the future, the road ahead is fraught with challenges. Debt, inflation, and geopolitical tensions are all factors that will shape the financial landscape in the coming years. However, these challenges also present opportunities for those who are prepared. For investors, the message is clear. Gold and silver are not just hedges against uncertainty. They are strategic assets that offer long-term value and stability. Whether through physical ownership, mining stocks, or other investment vehicles, incorporating these metals into your portfolio is a prudent move. In conclusion, the case for gold and silver has never been stronger. As the global financial system faces unprecedented pressures, these timeless assets stand as beacons of stability and resilience. For those who understand their value, gold and silver offer not just a hedge against risk, but a pathway to prosperity in an increasingly uncertain world.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.